Good morning, everybody. I want to talk to you this morning about marking out levels on your chart where the market may trade to. If you're a member of my Facebook group, I Trade Futures, then I posted a video on there over the weekend about a live stream that ICT did on August 8th, and he's teaching his son, but we get to sit in there and listen because he's recording all of it while he's teaching it to him. But he said this one of the very important things to do is mark out opening and closing gaps on a chart. And so I just wanted to go over a little bit how to do that. He said the weekly is important. So if you go to the weekly, you can see there's a gap here. This one is still forming, so we can't really use it. So we have to use this one. This would be the close of that candle. And this candle here is also where that's the open. And if it closes lower, it'll be a different color. And so the close is way down here. Now, so that's the way you do it on a weekly chart. On a daily, every candle is showing you, like this one opened here and closed here. That's why it's a different color. If it's the up close candle, it'll be one color. The chart defaults to red and green, but I've changed mine to white and blue just so it's easier on my eyes. But so the open, and then there's the close, and the high would be the top of the wick and the bottom of the wick. So like that's the low, high. And this one opened here but closed lower, so it's white. So that's what we're looking for. So we know this one closed here and then opened right there. So there's a little bit of a gap there between those two bottoms. They're not dead even. So that would be a gap you could annotate. And what I've done here is just gone through and marked. So here's the bottom of this candle. That would be the close of that one. And this one is also a white one. So we opened here and closed way down here. And so you just want to annotate that. And he says you need at least 5 days of these on your chart. So yesterday, when the market opened at 5, I went ahead and annotated that and a few other days. And I'm just going to go to a smaller time frame now and show you when London opened, what happened there. Let's see if I can find my candles for love of Pete. There they are. Okay. Not when Asia opened. So we opened at 5. I couldn't annotate those until after the open. But let's see if I can find it here. That's a visual gap that you can see right there. But time of day, that's at midnight. So we don't really need to pay attention to that one. We need the opening of the day. Okay, so that's another thing I marked out on the daily would be the market views these wicks as this wick right here. They view that as a gap. So I always mark the halfway point of that. And that would be the consequent encroachment would be the halfway point. And I do that with a Fibonacci. So let's go back. So I had marked out this consequent encroachment line, and I'd marked out this opening gap from Friday right here, new day opening gap from Friday. So London opens, the Sunday session opens at 5, and there was an overlap, but it's not very big. You can see That candle closed there and we opened here and started trading higher immediately. Where did we trade to? Consequent encroachment to the tick. I mean, right up to it. And then price reversed. And where did it trade to? Consequent encroachment of Friday's gap to the tick. That's pretty impressive to me. If you can predict the market that closely, you could take a long there and immediately hit your profit target for the day. Or you could take a short there and immediately hit your profit target for the day. Right now, my profit target is only 250. So then after that, we started trading back up. We came back down, and that little overlap I showed you right here, we started dancing around it. Started there, came down, all around it, but not really through it. We didn't offer any lower than that. This one we came right back down, touched it again, and then we went up, took out the stops above the consequent encroachment of the daily wick, came back up, touched it, reversed. I actually got in on this trade right here. And where did we go to? That overlap section. To the tick. That is very, very powerful stuff. So annotating your charts with things like this will definitely improve your trading. You can see a really nice gap right there. I'm not going to worry about that. That's just a 1 minute chart. But these bigger levels, if we're coming down like this, you can say, well, where would we possibly trade to? This is definitely a target. It's gone there several times. So, I mean, that's to the tick there. That's to the tick there. So as its price is coming down and we have a little consolidation like this, there's a halfway point on every one of these candles. Try to get in at the halfway point, selling short, comes down. My profit target was 250 and it took it out about right here. But this whole candle just shot down in the blink of an eye and then straight back up. So you could have a take profit here and a buy order there to shoot right back up. That's pretty powerful. But when it's going down like that, you don't really know it's going to reverse. So I don't recommend taking the long there. But definitely, if you can get in, you see a 5-point run, get it. $250. Why not? Let's just see as we midnight. Now we're starting to trade higher. We've blown through all this. So where could we be going to? Previous session high right there. And now we're in through London. And you can see we're coming up against this previous high in London, but this is Friday's high. It looks to be like this thing could go there. If we're 5 points away, if we could pull back at least like 80, I would be interested in taking a trade that we pop those highs. I could even put in an order for that. You can do this and do a limit buy for one. So if price does come down to here, and I'm just looking at it to get to, just right above that high, my take profit would be about right here at 85. And there's another $250. So that's the way you would use this information. Marking out previous session highs, any gaps that you see on the daily chart. We want to talk about daily open gaps and weekly opening gaps. I have the weekly here. New week opening gap, new week opening gap. And you can see we danced around it too. We put in a low here, and then we took out the liquidity at that low. When I say liquidity, I'm talking about people that were long way back here, they're taught as the price goes up, you move your stop. So right here, they would move their stop to here so they don't lose any more than that. And then it goes up higher, comes make a new low, then move their stop to here. And you can see this little set of everything it took out all the stops that were here, really washed them all out, and then moved higher. But that's what it does, is come down some wicks out stops. So we went up, retail Rick, he's in this, and he's like, oh man, this thing's going to the moon. So he takes the stop and he moves it right here. And then what does the market do? Comes down, takes it out, and goes higher. It's all algorithmic. The computer is tuned to go to those halfway points of the wicks and the halfway points of these candles. It looks like we're about to take out the high, so it didn't fill my order. Daggone it. But I don't know, maybe it will. Right now we're taking out the sell shorts that are above this one. So it could whip back down, fill me, and then go and take out the high from Friday. So I hope that helps with your trading. I think it's a very important piece of information to have on the chart. ICT is doing a mentorship right now for his son that I would highly recommend. I'm going to show you. I don't want to watch this video, but I do want to get to his channel. So let me get out of here. I don't know what this is all about. Get out of here. Okay, so if we can get to his channel, I'll show you where it's ICT 2024 Mentorship Lecture. This one is on the 5th. I think that's the first day he started. So here's ICT, Inner Circle Trader. And yeah, 2024 Mentorship. If you click on that, it should give you a list of all of them. And I'm currently in the process of watching all of them. This one was the one that showed how to mark out your levels, and I did put that on my Facebook group. But they're all really good. And like I said, he's teaching his son, so he's not going to teach him wrong. And it's all completely free. And this guy's been doing this 34 years. He's learned very well what the algorithm does and how it behaves. So it would be very beneficial for you to watch his videos. As always, no video would be complete without a risk disclosure statement. So you need to know trading futures is risky. I recommend you start on a paper trading account with real profit goals, real stop losses. You can't risk 1 million contracts and $1 million stop loss. It doesn't do you any good. Right now, I'm a 1-to-1, 250 a day, 250 a day, 20 trading days a month. If you could win even half of those, it's going to put you in the $2,500 a month range. And that's just with one contract. And that's one trade a day. So as you get better, you maybe could take 2 trades a day and maybe trade with more contracts. But really, the sky is the limit. You can definitely replace your paycheck with this type of knowledge. So, but if you start trading with real money before you're ready, you can also lose your paycheck. So make sure that you know what you're doing before you risk any real funds. The way my path is I'm using a prop firm. You can paper trade until you get good enough, then do the prop firm, get funded, and start making money with them. But you're using their money to trade, not yours. The most investment you'll have to do is $200 if you use a 50K combine. So that's pretty cheap, if you ask me. Pretty daggone cheap. I've lost a whole lot more money trying to trade real funds before I was ready. So $200, believe me, very, very cheap. Be kind. I needed to add a little bit more to this video about annotating these levels on your charts. show you how powerful it is. Earlier, when we were talking, I was showing you the session. You can just see it earlier in the video. Now we have the New York session. It opens up right around here, I believe is 8:30 Texas time, 9:30 New York. We start trending down. New York opens. Where does it trade to? The exact same level I had annotated earlier. It goes to the 50% mark, back up, comes down a little bit deeper. And this is that new week opening gap from Friday, new day opening gap from Friday. Goes up a little, comes back down, touches the center part, and then reverses and goes on a 30-point run right up to the previous day's high. So this is definitely an area where the algorithm was targeting today, or it would not have done that. Unfortunately for me, I had eaten breakfast about, I don't know, 7:30, and I got sleepy. And I was like, I'm going to go lay back down for a minute. I'll sleep till 9. Well, I woke up at 9:30. This occurred right at 9, so I missed it all. But I do believe, armed with that information, being how this stuff happens on a daily basis. Oh man, I don't need to be moving that one. This stuff happens on a daily basis, and I think it was right there. I think I'll catch another one armed with this new tool of mine. I was trying to figure out if I would have done it, where would I have gotten in, and typically it's best to wait until it cracks a latest swing high. So would have had to been getting in this candle. I don't like to buy run ups, so maybe this candle here is where I would have gotten in. Try to get my 5 points out of the deal, and that would have done it quite nicely. Could have even gotten 10 with only one stall, but that was just too good. I had to show it to you. If I go to like a 30-minute, you'll be able to see. This is where it hit. Right there. Right there is where it hit. Is immediately after the open at 5 o'clock that created this gap. It went up, went to the consequent encroachment from Friday, came straight back down, hit that red line to the tick, meandered, and as soon as the market opened at 8:30, shot straight back down, and then straight back up. That's what the algorithm does. And now we are continuing up. So there is an opportunity here for me to take along. I'm going to stop sharing the video and jump in there, I believe. Be kind to yourself, be kind to one another. Talk to y'all later.